What's going on, guys? It's Luke here. Today I wanted to make a video going over how to find your draw on liquidity. I'm going to make this video as quick as I possibly can. We're going to go over two examples, and then I'm going to show you guys the indicator that I use to find my draw on liquidity every single day. And this is going to help so much in your trading and finding targets and just where you think price is going to draw to. When you have conviction in these draws on liquidity, it's just going to make your trading so much easier. So the first thing you're going to want to do is get this ICT kill zones and pivots indicator. So if you go to indicators and you just type that in, it's going to be this one right here, and you're going to have to go in, apply it to your chart, and then you're going to pull up the settings and you're going to put these settings on the indicator. So just basically pause the video and copy all of these settings right here. And then you're going to make sure you want all of this the exact same. So all these times, this is your Asia session, your London session, your New York AM, your New York lunch, your New York PM, and then keep scrolling down. And yeah, just pause the video and just copy all of these. Make sure you have this as well. You have your 8:30 open and your midnight open as well. And yeah, so that's pretty much it. So finding your draw on liquidity, let's go over these points I have put down on the chart. Okay, so you're going to want to use the kill zone indicator. You're going to want to mark out your higher time frame draws on liquidity, which is going to be like your Asia highs and lows, your London highs and lows, your previous day highs and lows, and then you're going to want to mark those New York AM, lunch, New York PM, all that stuff out. Just mark all the important draws on liquidity, right? And to turn the indicator on, all you're going to do is just turn this, hit this I button right here, and as you're going to see right here, we're going to have, like, for example, this is New York AM low, this is New York AM low, this is London low, this is London high, this is Asia high, like whatever, right? Okay, so pretty simple indicator to use. The next step, obviously, is going to be you're going to want to see what was swept overnight, and you're going to want to see what liquidity draws are still open and that haven't been swept out or are still untouched, which we're going to go over two examples, and I'm going to show you guys what I mean by that. The next is we're going to wait for manipulation to occur. So you want to have a liquidity sweep or a higher time frame imbalance get filled. And then from there, you're just going to plan your bias, and you're going to use your lower time frame entry model to enter and target the next open liquidity pool. Now, this video is not going to really go over strategy. If you want to see my strategy, I have multiple videos where I talk about my strategy, and there's going to be more to come. But this is just basically going to be on finding the draw on liquidity specifically. So let's put the market back right here. And let's go, and so let's put this right here. So this will be 9 a.m. So let's just imagine we're coming into the market right here. Now, obviously, you want to start on your higher time frame. You're going to look at your 4 hour, your 1 hour, all that stuff. But again, we're not getting into strategy specifically in this video. So coming into the market, this is the 8 a.m. candle just closed right here. And what do we have open? So if we look right here, London high hasn't been swept out. Asia high hasn't been swept out. London low hasn't been swept out. This New York lunch low hasn't been swept out. And this New York AM low from the previous day hasn't been swept out. So obviously you're going to want to see price manipulate one way or the other, take out some liquidity, and then you're going to want to wait for a reaction. So let's go to the 5-minute chart and skip in a bit right here. So price opens up, we get market open right here, and price comes down and it sweeps out the London low right here, and it also sweeps out this New York lunch low from the previous day. Now from here, if we back up, we have to see where is the next draw on liquidity. So you have to look at it from this perspective. Obviously, if you trade ICT, you're going to see liquidity sweep, and then you're going to just want to wait for the break of structure and boom, whatever, target the opposing liquidity. But that's always not going to work out, right? Sometimes you're going to see liquidity get swept out, continuations to the downside, right? So you're going to have to look at lower time frame order flow and make an educated decision from there. So let's see right here, right? So price swept out London low, and it swept out the New York lunch low from the previous day. So I have two options at this point, right? I can either say, if order flow continues bullish and we get bullish confluences being respected, what am I going to target? What's the next buy side draws? Well, number one, you could say back up to this New York AM high, which is the New York AM high from the session that we're currently in. But beyond that, what else is buy side and hasn't been tagged yet, right? It's going to be this London high, and it's going to be this Asia high. But if order flow wants to continue bearish, like say, for example, we break structure to the downside, we're respecting a bearish FEG, what are you going to be looking to target for sell side? Well, it's going to be this New York AM low. So you have to basically wait for the manipulation and then wait for that lower time frame order flow to shift one way or the other. And you're just going to want to target the opposing liquidity. That's literally it, right? So like I said, again, we swept out London low, we swept out New York lunch low. If price wants to continue bullish, we're going to be looking to target back up to London high and Asia high. Why? Because they haven't been tapped yet. And if price wants to continue bearish, where are we going to target? We're going to be targeting this New York AM low because that hasn't been taken out yet. So I actually took this trade. I have a trade recap on it, but let's just go in as if we were, doing this live in the market, right? So we have this 2-minute FVG right here. I'm going to show you guys exactly the entry that I ended up taking. Again, confluence isn't going to really matter, but let's put this tool back on. We swept out London low. We swept out New York lunch low. We get an inverse fair value gap. Cool. We enter, say we put our order right here, stops below the wick. Price comes down, taps us in. So we're in this trade. Where are we targeting? Well, you could be safe and you could target New York AM high, which would give you about a 1-to-1 risk reward. And there you go. What else are you targeting? You're targeting London high because it's untapped. It hasn't been taken out. So that's take profit 2. And then what are you targeting after that? If you want to keep this trade running, Asia high is take profit 3. These are all of the untapped draws on liquidity. None of these draws have been taken out yet, okay? So as you can see, price went on, obviously, to take out all of that liquidity. It took out the New York AM high, it took out the London high, and then it took out the Asia high. The main takeaway was that those draws on liquidity were untapped. They hadn't been taken out. So we sweep out liquidity. And what do? Price rotates back to the open draws on liquidity. And in this case, obviously, it's going to be the London high and the Asia high as those main draws for buy side. But if order flow wanted to continue bearish and say, for example, let's go to the 5-minute chart. Let's say price ended up taking out liquidity and it wanted to continue bearish. Maybe price came down, pulled back into an FVG. Like I said, where would we be targeting? We'd be targeting this AM low, and then we could look for sells down to here. But that's going to wrap up example number 1. Let's get into one more final example, and we'll go over this one more time. All right, guys, so back with another example. We're going to be going over a short example this time. So we marked out already Asia high, London high, and we have London low right here. So if we start on the 4-hour, let's look right here. At this point, price is respecting a 4-hour fair value gap right here. And we look on the hourly. Now price is within and reacting off of an hourly bearish FVG. But regardless of that, what do we see that already occurred? Asia high has already been swept out and London high has already been swept out. So we have to think about this in terms of draws on liquidity, right? So if price wants to remain bullish and order flow on the lower time frame wants to remain bullish and respect bullish confluence, where would we be looking to target? Well, the next buy side draw on liquidity after this fair value gap is this New York PM high from the previous day. So that would be a draw. And then the New York AM high from the previous day. So if order flow wants to continue bullish on the lower time frame, we get above this gap, let's just say we get a retrace, we're going to be targeting this buy side draw up here and this buy side draw in here because they're two key buy side draws on liquidity. But putting together our clues, we see that price has swept Asia high, it swept London high, and it's within a higher time frame fair value gap. So I'm leaning obviously towards bearish price action from here, right? And what's the next major draw on liquidity? It's going to be London low. Obviously, yes, we do have an hourly low in here as well, which can be used as like a break-even point or a take profit 1. But final take profit for this trade would be London low. So what do? We scale down to our 5-minute, 15-minute, whatever you guys use, and just look for a simple entry. So as you can see, we inverse this 5-minute gap right here. We scale down just for example purposes, right? We enter, say, off of this 1-minute bearish fair value gap. We get this bearish close. We enter right here off of this close right here, stops above the 5-minute inverted fair value gap. And what do you target? You target the next major sell side draw on liquidity, which is going to be London low. And that's going to provide a pretty good risk to reward, just under 2R. And let's find this trade. Oh, did I lose it? Let's see. Right over here. Okay, right over here. So let's put the replay tool back, and you can see price just gives us that take profit right here. So it delivers that take profit eventually almost comes back and would have almost stopped us out, but as you can see, it ends up delivering full take profit at the London low. Finally, after, you know, probably sitting in this trade for a little bit longer, it does end up delivering to that next draw on liquidity, right? So once again, to recap this trade, if we put the kill zones indicator back on, price in the pre-market already swept out London high, it swept out Asia high, it reacts off an hourly and a 4-hour fair value gap. So what are you looking for? Again, you're probably leaning bearish, but if price action wants to continue bullish, you're going to be looking for longs up to this New York PM high and this New York AM high, because they're the next major buy side draws on liquidity. But if we get bearish confluence, bearish price action on the lower time frame, our entry time frame, which we do get here, we get this inverted fair value gap, we get this retrace, we enter on a lower time frame entry model, and we target London low because it's the next major sell side draw on liquidity. So entries really just go off your own strategy, but the main thing is targeting the major draws on liquidity and the open liquidity pools, which means the liquidity pools that have not been taken out yet. So that's going to wrap it up for me, guys. Hope you guys enjoyed this video, and I hope you guys learned something. If you guys have any questions, leave some comments below and I'll help you guys out. But that's going to wrap it up for me, guys. I'll be back with another video soon. Until the next one, give me a like, subscribe, comment on the video. Links, all my links in the description, TikTok, X, all that stuff. Check them out. Discord coming soon. Until the next video, though, I'll see you guys then. Peace.